Hi everyone, welcome to my YouTube channel. My name is Tabitha. If you're new to this channel, welcome and subscribe for more videos.
Oh, hi, today we are going to talk about how I prepare to file my taxes. So when it comes to tax season, there's a lot of things that goes into it. And most of the time we are not prepared properly, and this end up into how much tax return we get at the end of the day. So our goal into preparing to file the taxes is to maximize our tax returns so we can get whatever we deserve, the money that belongs to us, back from the government. And we need to put time into that and make it the way it's supposed to be. So the agendas of today will be 3. So first of all is how do you get the documents and what kind of the document that you need for your taxes. So that will be the first concern. So where do you get your T4s? Where do you get your business document? And where do you get your investment documents? And then from there, we will look at the deduction. So what are some of the things that you can deduct from your income before it is taxed? And then now you will see how much tax return do you get back. And if you want to increase your tax return, what do you do? Extra thing that you do so you can maximize your tax return. So as I said, we will do the document needed, the deductions, and how to increase tax return. We have said in our agendas, we are going to talk about document needed when you want to file your taxes. So we have so many documents that we need, starting from employment documents and maybe business documents, other investment documents that we need when we are trying to apply to do our taxes. So in this case, we will be looking at employment document. Those like T4, this one you will find them at CRA website, and we will look at investment document. For myself, I get those investment documents from Questrade because that's the broker that I use when I'm doing investments and so on. The next thing will be now looking at this individual documents. So we'll go to our CRA website and then look at how we can get those documents. These documents are example like the T4. The T4 are for remunerations. These are like for salaries, wages, and all those stuff. And then there is a T4A. So a T4A is another document that represents income. And this kind of incomes are like pensions, retirements, income, annuities, income, and others kind of incomes. Like when people were on lockdown and they were getting money from the government, so the T4 was coming as other type of income, which is T4A. And so now we are on the CRA website, and I'm going to show you how you can get your tax slip documents using the CRA website. So you come down here to related services. So the related services will be here. So when you click on tax information slip, so here you will come to this page, and you can select now if you want like for 2021, you can select there. And if you want like to get T4, you get T4 here. You will click and then it will show you the document. So I don't want to click it because it will show like my personal information, and I don't want to do that. And then the next thing you can click for the same year too, if you want to get more documents, you get the T4A statement. You click on it and which give you the option to download it. And then now you can print it out and take it to your accountants. If you have the securities transaction, like maybe investment or all those stuff, and then you will have the T5008. And if you did like RRSP contribution, you will get the receipt for the RRSP contribution. And then for TFSA, most of the time the TFSA is very irrelevant unless if you have over contribute to your TFSA, because anything that goes into TFSA or any capital gain income that you get from the TFSA is not taxed, so you not get any tax receipt. But for RRSP, it's different. So if you contribute into your RRSP, and then you will get like more tax return back. But if it's the time for you to withdraw from your RRSP, and then you must be asked maybe to pay tax back to the government. So it depends on how you are, which one are you using it for, the RRSP. But in all, this is where you get your tax information slip when you are preparing to go and do your taxes. So you have to come here, log into your account, go to other information, other related informations on under the thing there, and then you click on tax information slip and you'll get all the information that you want. The next part is for you to look at investment document. So investment documents, you will get them depending on which company that you take your investment to. For me, I'll go to Questrade and I will show you where to get the investment document. The account that I used before, the T54, is when you have investment in those taxable accounts. So you will get that T4. T5, T5008. And if you do your investment in your TFSA, most of the time, this one is not related to with the taxes thing because it's not taxed. So you will not get any document for the TFSA. But for RSP, you get like the document for RSP, for RESP, because those are like mostly tax related. So depending on what you're doing with the RSP or RESP, if you're contributing into it, and then it means like you are going to get the tax return back from the government. If you're withdrawing from it, and then it really depends on how you're using it and when are you withdrawing from it, you might be asked to pay tax back to the government. So it depends on what you are going to use it with. And for now, we're going to go to the Questrade. So now we are logged into our our Questrade brokerage account, and we are going to look for our tax slip for the year 2021. And I will get you through all the documents that you want for your taxes from Questrade. If you're one of them who do your investment in Questrade. So when you're here, you go to report. If you go to report, you will look down here on the drop down menu. So let's start with the TFSA account. So because the TFSA account is not really related to tax, whatever you get, gain or investment taxes, investment, whatever gain that you get, capital gain you get from, we will start with the TFSA. And the TFSA, if you use the TFSA account to make your investment, and then any income that you gain from that account is not taxable. And because it's not taxable, you will have any receipt that you receive at the end of the year for your taxes. So like, for example, in 2021, I made some money on individual this TFSA account, but I didn't get any receipt for the income that I got from this account. And it was mostly about 8,000. So So this account are not taxable. So you have no receipt for this one. So you can check it here. You can actually check it here on in 2021 Byron, there is nothing available. It's not green. It's supposed to show green, so you can see like there is the tax receipt or the. So the next one is RRSP. Okay, so the RRSP here is the one that is related with the taxes, right? So it could be either you're getting the tax return back or you're paying it back, depending on how you use it. So when you look at here, you see 2021, it shows available, which means you have a receipt, you have a document that you need to present to your tax accountants so that they can use it to prepare your taxes. So once you're here, you can just click on view or download the documents and then now print it out, take it to your account guide. So now as we look at the TFSA, no, as we look at the RRSP receipt, tax receipt, right? So we're looking at it at the tax receipt, and because I contribute money into this account, I will present it so that the accountant will use it to reduce my taxable income, and the government will have to return back some of the money that I paid as tax at the beginning throughout the year. So if you look at here, so this is the total amount of the money that I contribute to that account for the year 2021. 2021, I contribute 7,876 toward my RRSP. And this was with the goal that I would get back a tax credit, increased tax credit in 2022, in March of 2022. So the government sent me this receipt, which is made on Questrade and whatever. So this receipt, I'm supposed to print it out and bring it as an investment document to the guy who's going to make my taxes, and the 7,000 will be subtracted out of the income that I made that year, and I will pay less taxes, and the government will bring back most of the taxes that were deducted from my paycheck. Okay, so that's what it is. So this is how you get your investment receipt or documents. So if you're using Questrade as where you do your investment, keep your RSP, keep everything, and then you just log into your Questrade and goes into under account and then go report, and then from there you can download the document that you want. You go to your RSP, you go to your TFSA. TFSA most of the time does not show any document because it's not related to taxes stuff. And then you can go into your marginal account and get your document there too. So the next document will be from the marginal account. So most of the time, marginal accounts are taxes. But things like saving account, if you're doing your investment in saving account, it's going to be taxed. If you're giving the capital gain you get from that saving account, it's going to be taxed. If you're doing your investment in marginal account, whatever you gain from that account is going to be taxed. And then the only place where you cannot get taxes is TFSC, only inside TFSC. For RSP, it worked differently. So if you contribute money to that account, your taxes are deferred to the future, and then whenever later on you withdraw money from it, that's when you pay taxes. It's different. So for marginal account, you come here and click on that. So that's where I was saying, like here, you get your T5008, original for February, right? And then you can now download it and see like what transaction you make from this account, and the document that you get from the marginal account is T5008 or T5REG. So trading whatever, some summary of the things. So this is where you also get your taxes. You can now download all or download one, and then you see your activities. Most of the time I don't use this account because I don't want to be paying extra taxes. So I do all my investment in the TFSA account, because there you can get away with not paying taxes. So that's the hand of how to get your investment document from Questrade. Get like your document from your CRA, things that are related to employment. We also look at how you get your investment document from your broker. Maybe it could be the bank or whatever. So now let's go to the personal deduction. So what are some of the things that you need to deduct from your income before it's taxed? So these things will help you get like more tax return back from the government. So you can do charitable donations. Could be $10 to sick kid or whatever you want to donate your money. So that's also contribute to deduction. They will reduce it from your account, from your income. You do employment expenses, maybe you've been told to buy like clothes and you have receipt for that were used for you to buy your clothes for the job. So, and maybe the company that told you to buy clothes do not do reinvestment of your money. So that amount of money you need to reclaim it from the government by deducting it from your income. Moving expenses too. Like let's say you have a job here in Toronto and you want to move to West Canada and you're using your money to move, you can present that receipt to the to your accountant, and they will reduce it for you as tax deduction. So as we go on with the personal tax deduction, we have long lease that we use to deduct money from our income before it's taxed. So deduction is rent expenses. Most of the time people don't really claim their rent expenses, and that is eligible. You can claim your rent expenses, and most of the time you can be returned some little money for claiming rent expenses. RRSP. So RRSP, when you contribute into your account, it's not supposed to be taxed at the beginning. So it's supposed to be taxed in the future. So here, currently, you're removing it from your income. So you don't pay tax. So tax deductible is tax deductible. RSP, RESP, both of them, they help you reduce the amount of tax that you pay to the government and increase the tax return that you get from the government. So another more example on the personal tax deduction would be another one would be like stuff like tuition expenses. Like let's say you have a student loan and you're still paying your student loan, so you can also claim those ones, tuition expenses. You can claim childcare. Let's say in Toronto you're paying $60 a day for childcare, so that amount that you pay, there's part of it that you need to get back, because you don't have to pay all your income that you had from your employer back to the daycare. So the government will encourage you to claim some of your childcare expenses. Medical expenses. There are some of the medical expenses that you can claim, especially for the senior group. They can claim medical expenses. Another examples are for personal deductions are things like child support, like someone you're paying child support. So sometimes you can also claim the child support that you have been paying to your kid or whatever. So people claim child support too. and then there's child tax benefit. People who receive child tax benefit too, they can claim part of it too. And the long list is ending. So we have so many deductions that we have to claim every year. But most of the time, some people miss on some deduction and they end up paying the government most of their income. So parent and grandparents deduction. So this one, if you're supporting your parent and grandparents and they're living with you, you can deduct the amount that you give them every month, and the government will reimburse you the money. The GST credit rebate or rebates, those ones they are also deductible. And union and membership due. So if you're paying union and membership due in your job, and then you can also claim that one. So more of the personal deductions are the list goes on, and they vary from one individual to another. New immigrants, they can claim some of their living expenses because they are new, they are not making any incomes and all those stuff. So now let's look at the business deduction. So it's different when you're doing a business. The income that you make is not taxed up front. You get the full gross amount. And then after that, you can now decide how much you want to pay to the government. After you have deduct all the expenses, even if it's like personal expense, some people they do that. So they deduct all that expenses and then they now give the government the amount of income that they think is the one that is eligible to be taxed. So at this point, it's the business owner who have the control over how much tax they pay. And that make the difference. They can even decide not to pay any because they will really claim a little bit of any income that they make, claim it back, and then now present whatever they want comfortable to the government so that the government will tax. So for business deduction, they will do stuff like home office expenses, they will deduct that. They will also deduct car expenses, even if they are using it to go and visit their sisters, relative, they can deduct that. They can deduct capital gain and capital losses, and this is very eligible. There was a time I made, I did a business on Amazon, and it was going well, but somehow I was paying a lot of fees and the money that I was using to buy product, and so I did not make any profit, but I had to claim all the losses, including fees that I paid, the money that I used to set up the business and all those stuff. And the government were happy to give me back my money. So you can claim capital gain or capital loss. You can deduct them too. And how do you increase your tax return? So how do you get more money out from the government? So most of the time, people have their RSP room and they are not using it. So you can maximize your RSP contribution room, and that will really give you back most of the money from the government. And you can max out RESP if you have children, and make sure you keep all your receipt when you are doing business so that you claim every expenses that you put into your business, because tax expenses can really break your business if you are paying more taxes to the government than what you make in your business. So you have to make like your revenue that you make and the expenses that you put in, and then make sure like the tax do not take much of it of your income, because if it does, and then you have no business. So keep all your receipt, maximize out your RSP contribution room, you max out your RESP contribution room if you have children. And that will be the end of the video for today. And if you have not subscribed to my YouTube channel, please subscribe for more videos.